Are you tired of following the same old financial advice only to find yourself stuck in the same place year after year? Well, what if I told you that everything you've been taught about money and investing is not only outdated, but could be actively preventing you from achieving true financial freedom? It's time to uncover the truth. Enter Robert Kiyosaki, the maverick financial guru and author of the international bestseller Rich Dad Poor Dad. Kiyosaki has been shaking up the financial world for decades with his radical ideas about wealth creation, investing, and the key to escaping the rat race. So today I'll take you to Unveiling the Investment Secrets of Robert Kiyosaki. If you're new to the channel, hit that subscribe button and that little notification bell icon so that you don't miss out on any of our video updates. Plus, it helps us spread the Thrive Wise love to help more people thrive wisely. Now, let's begin. Let's face it, most of us have been fed a diet of financial half-truths our entire lives. We've been told to get good grades, land a secure job, save diligently, and invest in a diversified portfolio of stocks and bonds. But here's the kicker. This conventional wisdom is keeping millions trapped in a cycle of paycheck-to-paycheck living. Kiyosaki challenges these norms head-on. He argues that the traditional path, what he calls the poor dad mentality, focuses on job security and saving, rather than on building assets and leveraging money to work for you. This mindset leads to a dangerous over-reliance on a single income stream and a false sense of security. Moreover, the idea that your house is your biggest investment, Kiyosaki calls this out as one of the biggest financial myths. A house, he says, is a liability that drains your pocket with mortgages, taxes, and maintenance costs. It doesn't put money in your pocket unless you're savvy enough to turn it into an income-generating asset. So how about we dive into the mind of Robert Kiyosaki and unpack his wealth-building playbook? And trust me, it's as unconventional as using a pizza cutter to trim your hedges, but way more effective. First up, let's talk about Kiyosaki's golden rule. The rich don't work for money. Money works for them. Mind-blowing, right? It's like he's telling us we've been playing Monopoly all wrong. Instead of running around the board collecting 200 every time we pass go, the real players are the ones who own Boardwalk and Park Place. So, how do you get your money to work for you? Kiyosaki's answer is simple. Assets. But not just any asset. He's not talking about that collection of vintage Beanie Babies in your attic. Sorry folks, Princess Diana Bear isn't going to fund your retirement. He means assets that generate cash flow. Here's where Kiyosaki drops his famous cash flow quadrant. Picture a square divided into 4 parts, with E for employee, S for self-employed, B for business owner, and I for investor. Most people, he says, are stuck in the E and S quadrants, trading time for money. But the real magic happens in the B and I. It's like the difference between fishing with a rod and using a trawler net. One catches fish at a time, and the other hauls a bounty. Let's break it down with a Kiyosaki-approved asset, rental property. You buy a house, maybe even a little liability you're living in, rent it out, and voila! The tenant is essentially buying the house for you with their rent checks. Meanwhile, you're benefiting from appreciation, tax deductions, and building equity. It's like having a money tree in your backyard, except instead of apples, it grows dollar bills. But Robert doesn't stop there. He's big on leveraging other people's money, or OPM. It sounds like a bizarre breakfast cereal, but it's actually a powerful wealth-building tool. Here's the deal. Instead of saving for years to buy that rental property, you use a mortgage, which is the bank's money, to buy it now. Your tenants then pay the mortgage, and you keep the profits. It's financial jujitsu, using the bank's weight against it. Now, I know what you're thinking. Debt? Isn't that bad? Well, in Kiyosaki's world, there's good debt and bad debt. Bad debt buys liabilities, things that take money out of your pocket, like that jet ski you use twice a year. Good debt buys assets that put money into your pocket. It's the difference between a loan for a fancy car and a loan for a delivery truck that makes you money. But wait, there's more. Kiyosaki is also a huge proponent of financial education. He often says the only real asset you have is your mind. He encourages constant learning about business, investing, and most importantly, taxes. Ah, taxes. The word that makes most people cringe harder than hearing a fork scrape on a plate. But for Kiyosaki, understanding law tax is like having a financial superpower. He points out that a tax code is actually an incentive code. Governments give tax breaks for behaviors they want to encourage, like providing housing, low rental property deductions, or creating jobs. Cue the business owner applause. He loves to tell the story of how he once bought a $75,000 car and wrote it off as a business expense. Meanwhile, his poor dad, a government employee, had to pay taxes on his $25,000 car. It's like the government has been giving him a high five for being a savvy business owner. Speaking of business, Kiyosaki is all about entrepreneurship. He says the richest people in the world look for and build networks. Everyone else looks for work. It's like the difference between building a McDonald's franchise, a system that works without you, and opening a Bob's Burger joint, where you're flipping patties 24/7. He uses the example of his board game, Cash Flow, which has made him millions. He didn't manufacture, market, or distribute it himself. He just created the idea, then leveraged other people's skills and resources to bring it to the market. It's like being a composer. You write the symphony, but you don't have to play every instrument. But here's the real kicker. Kiyosaki believes that the key to all of this is mindset. He talks about the scarcity mindset, thinking there's not enough to go around, versus the abundance mindset, which is believing there are endless opportunities. It's like the difference between fighting over the last slice of pizza and realizing you can just order another one. He tells a story about a town during the Great Depression. Two men had some cash. One bought up goods cheap from desperate sellers, and the other gave loans to people to buy those goods. Both made a killing when the economy recovered. The lesson? In every crisis, there's opportunity, if you have the right mindset and knowledge. This abundance mindset extends to failure. Kiyosaki sees failure not as a stop sign, but as a flashing lessons learned sign. He once invested in a small business that went belly up faster than a heavyweight boxer. But instead of crying over spilled milk, or in this case spilled cash, he said it was the best $20,000 seminar on what not to do in business. And lastly, how about we talk about risk? Critics say Kiyosaki's strategies are too risky. His response? The biggest risk is not taking any risk. It's like telling someone scared of flying that driving is statistically more dangerous. The real risk, he argues, is relying on one paycheck, one pension, or one government to take care of you. But he's not advocating blind risk. Far from it. He preaches, quote-unquote, educated risk. Understanding your investments inside and out. Before he invested in real estate, he worked as a property manager to learn the business from the ground up. It's like test driving a car before you buy it, except the car is a multi-unit apartment complex. And all of these strategies culminated into the release of Rich Dad Poor Dad. It was like Kiyosaki had lobbed a financial truth bomb into the conventional wisdom. The book challenged everything, from the sanctity of job security, the home as investment myth, the education system's failure to teach financial literacy. Everything about it. People devoured it. It even spent over 6 years on the New York Times bestseller list and has been translated into more than 50 languages. Why? Because Kiyosaki didn't just question the status quo. He offered a blueprint for escape. The book's core message that the path to wealth is through financial education and building assets, not climbing the corporate ladder, was a revelation. It was as if millions of people simultaneously realized they'd been running on a hamster wheel, mistaking motion for progress. Suddenly, average Joes and Janes were talking about cash flow, leverage, and tax strategies like they were discussing last night's game. Kitchen table conversations shifted from how was work to how can we make our money work for us. This shift was seismic. People weren't just reading a book, they were waking up to a new financial reality. It was the monetary equivalent of taking the red pill in the Matrix. And once you see the code, or the rules of money, there was no going back. Robert Kiyosaki's teachings boil down to this: build assets, use good debt, understand taxes, continually educate yourself, and cultivate an abundance mindset. It's not about getting rich quick, it's about changing your relationship with money. By applying these principles, you're not just chasing wealth, you're designing a life of financial freedom. Also, what's one Kiyosaki principle you're going to implement this week? Share your wealth building game plan in the comments below. And let's inspire each other to break free from the old money mindset. Well, that's basically unveiling the investment secrets of Robert Kiyosaki. And thank you guys so much for watching today's video. And hey, it seems that YouTube thinks that the next video can completely transform your financial situation. Want you to find out whether they're correct? And please don't forget to click the subscribe button to see more videos on how to thrive wisely. Till next time.